Uber reporting third quarter results, beating on the top and bottom lines. Here to break down the numbers and some of the key factors that are driving the business. Join us right now in an exclusive interview is Uber CEO Dara Khosrowshahi. It's great to see you. Before we get into it, Dara, I should mention, despite the numbers looking good, the market may not think that they're as good. Right now, the stock is off about 6%, and I'm curious what your reaction to that is and why you think that's the case.
Yeah, it's really tough to gauge market expectations, but for us, actually, we came in on gross bookings top line, growing 20% right at our own expectations as well. Our EBITDA came in at record levels, 1.7 billion, up 55% as well. Free cash flow over $2 billion, and operating income over $1 billion, another record for the company. So we're very excited about the delivery of the results this quarter and incredibly optimistic about where we're going from here.
Let's talk mobility. So revenue up 26% year over year, driven in large part by trip volumes. Where are you seeing that? Is that more of an international play right now, or is that more U.S.? How do you go ahead.
Yeah, well, we see pretty broad strength in terms of trip volumes, but especially outside of the U.S. and the international markets. When you look at the APAC markets or European markets and Latin American markets as well, there's a number of newer products that we're launching. Two-wheelers, for example, in Latin America, or three-wheelers in India as well. And this is resulting in very, very high trip growth as we lower the price and make the service available to a much higher percentage of the population in those markets. So we're absolutely seeing very strong growth in the international markets.
Delivery business, trip volume driving about 18% of the growth year over year. How much pricing power do you have on the delivery piece at this point?
Well, I think that we've seen in delivery that it's a very, very sticky habit. Audiences are at all-time highs. Frequency continues to increase as well. And then really on the price side, we are focused on making sure that delivery is as affordable as it can be. And that comes in a couple of ways. One is with our membership program. So we now have 25 million members in our program. You get free delivery, you get discounts on delivery as well, and mobility. The number of members is up 70% year on year. So higher and higher percentage of our consumers are getting a more affordable service both for delivery and mobility. And as a result, they're much more sticky to our product. They transact or spend 3 times more than non-members do. And then we're also working with a bunch of merchants as well. And you might see it on NFL game day, 50% off wings, et cetera, to get special deals to our members and all of our customers at Uber Eats as well. We call them merchant-funded offers. And the percentage of offers now running through the system are at all-time highs as well. So while we do think we have pricing power, and we've seen that over the past couple of years, we're actively working to make delivery and mobility more affordable for everybody.
Got to ask you about the big headline that we reported and a lot of folks have been talking about for a couple of weeks now, this news that you have been discussing the possibility of wanting to acquire Expedia, a company, of course, that you used to run. What can you tell us?
Well, Andrew, I'm sure that you'd be shocked to know that we're definitely not commenting on any particular deal one way or the other. For us, our focus right now is organic growth. And when you have a business that's growing top line at 20+%, you've got bottom line growing at 50+%. We have free cash flow now that we're allocating more and more to buying back our own shares. So you combine kind of the compounding of bottom line and reducing share count that we expect to start doing next year, you get very, very high returns for shareholders. So for us right now, the bar for any kind of acquisition has never been higher. And the focus is really on organic growth. To the extent that we go out and do M&A, it will tend to be, at this point, smaller deals that are much more kind of closer to home in terms of what we do. An example of that is a proposed deal to buy Foodpanda in Taiwan. We're not looking at this point to do big deals, transformational deals one way or the other. And really the focus is on organic growth because the organic growth is at still a very, very high level.
You don't need to say it. I will then read between the lines. It sounds like this is not something that is in the offing. Maybe I'm getting that right. Maybe I'm getting it wrong. Let me ask you a different related, though, question. Long term, there's been this talk, and you've talked about it, about this sort of super app idea, using the Uber app as a platform for all sorts of things. How should the investor class think about that?
Well, it's something that's well along the way. We have essentially a super app, or really a family of apps that people are using every day. And we want to make it an everyday habit, going anywhere, getting anything. So, for example, you see us adding more product on our mobility app. We're actually adding trains, for example, in the UK, and we've just started launching trains in Spain as well. In delivery, we started with restaurants, and now we've got grocery. You can get pet food, and really expanding the kinds of services that we have on delivery as well. So we are slowly but surely building that super app that can be your operating system in your local town. Anything and everything that you want, anywhere you want to go, anyhow you want to get there, we as Uber want to be there for you. And we'll have a membership program that embeds you into our ecosystem even more and more. So we're well along the way. There's no other company that's trying to do this, and there's no other company that's executing that local super app vision as we are.